left, everyone. Is this the end of the month yet? Hello, Jonathan Rainey. Nice to meet you. Welcome to Face. Everyone doing okay? Well, everyone wanted volatility. Be careful what you wish for. Okay, so early in the week, I talked about the dollar. I don't know if it go back far enough. Forget it. And showed this little island bottom here. And what was interesting was while the market was still selling off, the dollar kept getting a bid. I talked about a target at 61.8, overshot it a bit yesterday, playing around with it right here. If it wasn't a Friday, maybe I'd be probing it. You know, this is a nice rally if you're a dollar bear to start considering shorts. Okay, so we'll see what happens up against this week's highs sometime next week. You look at it on a weekly basis, pretty nice candle, right? So almost looks like the kind of candle where it could just blow off to the upside. So next week's going to be important to see if we get some follow through. My best guess is that we don't make a new high and we play around, maybe distribute for a few days and start heading back down. Equality of this move from around in here is going to take it down to 92. So we'll see what happens. And something that was even more stellar with risk continuing to be off and the carnage that we saw until last night. Look at this. The yen, took out 104.5 and cleaned out the flash crash low here and got all the way down to 101. So everyone who was long yen was gone, and look at where it's closing. So is this a false breakdown? And was the yen telling us that the bonds had peaked and rates had bottomed? I see Steve has a bond short on. Thought it was in doubt yesterday, but looks like a change. He scored on the short in the bond. I saw it over on Skype. So this is pretty impressive in the end. So we're either going to do the same thing that we did in the dollar and fail between here and 108.5 and roll over again, because this is actually, you're looking at almost an 1100 pip move, and under this would take it down to 90. So here's your monthly, and you see it never violated this low. But when you look at it, it almost looks like, we're going to have a blow off in the end. Like we could have a blow off in the dollar. At least the dollar is, the difference is you have a green candle. Oh, you don't on the weekly. Oh, that's a monthly. That's why. My fried. All right. Well, you have reversal months going too, as long as I looked at it. But there you go. Nice reversal week. Nice reversal week. Blue candles. So with the yen, I'll look at it up around this 108.40 if we get there. Remember, 780 was a big pivot for a long time. Also, 980 is a big pivot. So I'm going to give this the benefit of the doubt, at least for a week or so. And the dollar's already at 61.8 back. I haven't done the measured move here. It's 11 though, so 6 back. We're about halfway back in the end. I'll update my fib. So actually the dollar has a stronger look to it than the yen does, because we've already retraced 61.8. See, we're not that far away from new highs. So if I were to go with either, it would probably be US dollar yen. Okay, so Gregorius, BOJ is expected to act if it hit 106. Well, in what way? And thanks for sharing your ideas in here. We appreciate all of you guys sharing your views. I know a lot of you express them. And, every once in a while we pick up an idea from you guys too. So keep up the good work, Gregorio's. Nice call. Again, I'm sure Blake wants to get going, but I want to leave it on one point. Okay. So it's one thing to make a great call, like buying the VIX at 14 or telling people to buy the VIX down here, which I did, and to buy it and then have an objective up here at 28. And that's a good trade, right? VIX doubled. But where did I miss out? It was not a great hold, was it? I mean, huge windfalls on it, historic. That's why you always leave a piece on for the runners, guys. Always leave a piece on, even at your objectives. You never know. Objectives could extend. You never know how, well, you never know how far a rubber band can stretch. Okay, so anyway, a lot of people are saying, and I'm sure the VIX is going to get hit pretty good today, but a lot of people are saying this isn't like 2008. And right, one was systemic financially, and this is uh, both. First, starting off with this is systemic too, if you notice what the Fed did. And the most liquid market for many years when I was just trading futures was the 30-year bonds and the note. And you know what the bid offer would be 30-second between the bid and offer. And before the Fed came in, it was a full point bid offer. So the treasury market was not functioning. You couldn't get a trade off. That kind of spread may happen in junk bonds, but not in the quality, flight to quality 30-year paper to have a one full point spread between bid and offer to get a trade off. That's a problem. Okay. And you know what? It also reminds me of what happened in the overnight repo market. So you know what is maybe it's Corona, and Corona is having people close, and that's going to have economic impact. But there were things going on before Corona that this is exposing because the system's under stress because no one was hitting the sell button for so many years, right? So here we are, we're exposing market structures and the lack of liquidity in what should be the most liquid contract in the universe. So with that being said, Blake, you glad to be wrapping up the week here? When I look at this VIX, here was the 2008 high in VIX. I think it was in the 80s. So it may not be like 2008, but the VIX doesn't seem to see the difference. And with that, Blake, what do you think here with this huge rebound? And
first of all, I think that today is a recovery day. So can you see
that's
my
it.
screen, my
Yeah,
dollar max? Okay.
yeah.
So, I was first and foremost, I was just short the dollar max at 21.65 and just covered it down here at 43. Just we're like right where we're at. This is a head and shoulder pattern, so I'm going to be playing it on the short side. We're limit up in futures, and it was interesting. Polly said that we hit there was a bunch of redemptions reported overnight, which that if you were watching or if you're following me on Twitter, I had said that you got classic, the stock market's up 7% in Europe and all the redemptions hit. That was it was a typical uh, uh, capitulation, if you will. Capitulation, I'm going to use that term lightly and loosely today. I don't want to say the market's capitulated. I want to say the mom and pop has capitulated, which means that they sold and obviously stocks are going to bounce here. Now, if you look at, and let me pull up the index really quick. This is the S&P index, cash index. All right. So you see where we're at. We closed at the weekly trend line. It's natural that we're going to bounce here. I mean, I would assume that we bounce, and we probably bounce to, let me just give you a rough estimate here.
We went to 24 last night, though, right?
We did. We were at 2,400. This is not on the futures. This is the cash.
Oh, okay, got it.
Okay, so a little different here.
So it never happened.
Huh?
So according to people that use this chart, it never happened.
Exactly. If you watch the S&P cash market when we open, we're going to open up 5% today. So we're going to open up here. You know what I mean?
Yeah.
Or somewhere around here. I don't know. Anyway, I wouldn't put it past the market for next week that we bounce somewhere to these levels, right?
Yeah.
Which would be anywhere between 2,700, 2,750 to 2,850. I think that's doable. Now, there obviously is still some risk. I mean, to be blindly long risk right now, you guys know that we're going into the weekend. We're testing more here in the United States. The numbers are going to be fugly as we go into this weekend. There's going to be more panic. Grocery stores are going to be packed. Costco's are going to be packed. Schools are going to be closing. There's going to be, an acceleration in cases and possibly deaths here in the United States.
Well, plus they're going to lock us in California.
Yeah, we might go into lockdowns, certain areas. There's rumors that New York City's going into lockdown.
I'm leaving now.
Huh?
So I don't get trapped. I'm coming over.
No, don't come here.
I'm coming, Blake.
We got Sun City over here. You come over here and you're damned.
I'm coming. I'm leaving. See you guys.
You're damned.
Right, Blake,
I'll be there
for happy hour.
So that's that's going to be the big risk. Yeah, you would make it for happy hour, by the way. That's the big risk over the weekend, is that to be long risk blindly, or to be long risk in general right now, is, I don't know if that's the right trade. I think we're going higher from here, but the flip side to that is, if we break this trend line, if we start getting like daily closes below yesterday's lows, then we got a problem. And so right now we're seeing a bounce in a lot of things. Like the dollar yen is ripping. You'd mentioned about bonds. Look, the bond market was it was in the midst of a sell-off midweek this week.
Yeah.
So we were in the midst of a sell-off, and we're currently selling off right now. So the dollar yen, I told everybody in the chat room this morning, I'm expecting the dollar yen to go 108. It's a 618 retracement. It's
all right.
It's going to be right here.
Yeah.
And I think that's where we're going.
And Blake, don't you think, I mean, you've been looking at charts for a few decades and trading that long, that after a move like this, even if we are going to bottom, how much repair and time a market's going to need to do it, that we're not going to just have a V bottomed to new highs. It's going to take people selling to stop and accumulation to begin.
Yeah, we're not going to get a V bottom. I think that, well, now are we talking about dollar yen, or are we talking about something else?
The S&Ps, I mean, all these charts that had, waterfall declines.
Oh, we'll have an L shape. I think
all of them.
I think we're going to have an L shape, or better would be, like we're going to have a pennant type of thing, so it's going to look something like, it's going to look something like this, right? An L shape move, right?
Yeah,
is what I'm
stabilize.
Yeah, we're gonna stabilize, and I think that's what's happening. So just keep that in mind. I think that's what we're going to be dealing with moving forward. But before we break down again, that would be my thought process here. So with that being said, you just have to be really careful. And like I said, the news stream is likely to get worse before it gets better. So that is your risk by being long risk over the weekend. I would assume, and this is just assumptions here, that all the news is going to be bad over the weekend. We're going to gap down, and then that's going to give you another opportunity to buy whatever, you know, just as a trader. And I'm talking as a trader, not necessarily an investor. Um, because I think that we are going lower ultimately. This virus is not, it's, it, it any vaccine that we have, I saw a story, and I'm not going to pass it over to you guys because it's not confirmed, that there's some vaccines being worked on. And but even if there's a vaccine, it's going to be for this next fall. And it's going to have to run its course this spring and summer. Like I said, there's going to be more cases, more deaths. It's going to probably peter out in the summertime. It'll be revived probably with a new strain this fall. And frankly, it's going to weigh on the global economy and GDP moving forward. So you got to use these rallies as opportunities to be sellers. Again, where are we going to go? My assumption is somewhere here. And just so you guys all very clear, the S&P did complete its pennant formation. So to be short down here doesn't make much sense. So you don't have a whole lot of edge. Let me pull up the 4-hour chart. You don't have a whole lot of edge at this moment. You don't. You really don't. So um, it's like, what are you going to do here? Do you really want to be long? Do you really want to be short? I think it's a really tough question to answer right now, and it's not something that you have to do anything about. And I'm going to be perfectly frank right now. Because you have no edge, whether you're long or short, there's nothing wrong with saying, hey, I've survived this week. I made some money, I lost a little bit of money, but I survived, whatever it is. Hopefully you had a great week. I had probably one of my best weeks in 6 months. But if you're not in that camp, and let's say you got out unscathed, or you lost a little bit of money, but you're like, whew, man, it could have been way worse. It probably could have been way worse. So there's nothing wrong with just being in cash and waiting for a better trade to develop going into next week, because I think that's where we're at. It's kind of like the situation yesterday. And I tweeted about it. It's like, okay, I'm cash is a position. I don't feel too comfortable about being on the short side, but I don't really feel too comfortable about being long. So if that's your take, then so be it. But let's talk about a little bit of some of these currencies. Um, and then I'll address some questions really quick. This reversal in the euro was pretty big. And I think that the dollar funding issue right now is something that I talked about yesterday, that if the S&P gets down to these levels, the dollar is going to start pivoting as a risk off type of currency. And I think that's where we're at right now. I think the dollar is starting to find that footing. All right. The repo markets are being stretched. The credit markets are being stretched. People are now going, I need dollars. So I think the dollar is in that camp of transitioning into that risk on, risk off type of currency. That's important to understand, because if the stock market actually does break down from here, and let's say we break lows, then the dollar might be actually more in fuego, right, if you will. It's going to be purchased. But that leaves us kind of wondering, what do we do with the euro right now? And frankly, I'm not really too sure what to do with the euro. I like the fact that it broke the 38% retracement, which leads me to believe that we're going lower in the euro. But let's say I'm right, and stocks bounce. Well, maybe the euro does bounce back to 113 first before rolling over. So that's something to think about. Cable's trading really heavy and really bad. I was actually going to short the euro pound this morning, because the cable was actually trading, when I got up this morning, it was like 125.80. We're up here and I'm like, oh man, I missed my euro pound short because I was going to short it right at the 618. We were here when I woke up. We were here and we had already rejected the 618, and I'm like, oh, I miss shorting it. But now that we're back above this and the pound looks so heavy, I don't know if I really want to touch it, frankly. I'm looking at it going, yeah, I don't know. It's not. I don't know if I really want to deal with the cable right now. So the cable is trading heavy, and I guess the EU UK talks are pausing right now, and so that's a bit of a problem, for the UK, I guess. So anyway, I'm just not dealing with that. The Aussie not doing anything. Kiwi's not doing anything. The Canadian, I shorted the Canadian last night. I was watching a movie with my family, and I shorted it at 139.35. After the movie, we were at 139, somewhere around here, and I closed it out, and I'm like, I made like 30 or 40 pips or whatever it was, as we dropped around this 139 level. And then I watched a movie with my family, and I made 40 pips, and I'm like, oh, I'm gonna sleep great tonight. And then I woke up this morning, I'm like, oh my god, I missed I missed like 100 pips. But the Canadian, just so you know, one of the issues I have with the Canadian right now. Well, first of all, technically, we hit the 161% extension of this last leg lower, so that's why I was short. I was a little nervous last night because Prime Minister Trudeau, his wife tested positive for the coronavirus. So why is that an issue? Because if Trudeau falls ill himself, which is highly possible, with the coronavirus, then the risk is that maybe the Canadian currency continues to get hit. So that made me a little nervous about being short.
Blake,
Yo,
sorry, don't worry. Most politicians don't want to even be close to their wives.
wait, does that only
Why does that apply only to politicians?
This said only for politicians? Just kidding. I'm joking, guys. I'm, when you've been with the same woman for 20 years. Anyway.
Wait a second. Let me call Lisa.
Hey, no.
I'll send her a clip of the.
Anyway, but no, jokes aside, though, if he does fall ill, the Canadian currency could, continue. I mean, it could get hit. Now he's in good shape, and chances of him surviving are high, but still, that's a risk being long the Canadian. So last night I was like, yeah, I don't want to be long, and I took my profits like a wussy, and anyway, but you can see why we're at big resistance. I think that the dollar Canadian now is going to be, in this range that you can trade it. It'd be a buyer down here at 137, seller up here at 139 and change, and probably trade around this range for now until we figure out what we're going to do. Like I said, I shorted the dollar MEX, did pretty well with it. It already started to bounce. It's starting to bounce aggressively here, and I think I'm hands off unless we break below this 21.35. I made probably one of my better trades of the week, actually, just shorting that, because you don't need a lot with the dollar MEX. It's moving so wildly that if you have a relatively you have a relatively small position, you can still do well. And that's kind of the situation I was in with this. Is I didn't take too big of a position, but I probably had one of my bigger trades of the week, profitable wise. So yeah, anyway, it's bouncing right now, but I think that it'll stall around the 2160 level. I just think that as long as stocks stay supported, the dollar Mexican peso will drift lower. This false breakout here from this week is a little risky for longs now, and you guys know it's a funding currency. It's very illiquid, so you got to be real careful with it. Steve, I know you're going to talk about this, but this U.S. dollar Norwegian krona, and I'm gonna let you talk about it because I know you're trading it. I'm not, but we hit the 261% extension of this last move. This is a blowout move, and frankly, I wouldn't want to be on the long side of this anymore. But you know, do you short it right here? You know, I'll let Steve go into that, and Stelios, I'm sure, has something to say about that too. But I think you have to be really, really, really careful with U.S. dollar, Norwegian krona um, longs at this stage in the game, in my opinion. Okay. One last thing I want to reiterate about the dollar yen. With bonds looking like they're going to continue to pull back a little bit, that means yields are going to go up. This dollar yen is wickedly bid. I would be nervous about any longs as we approach 108, but I think what I was saying in the chat room when we were trading below 107 earlier this morning at like 106.50, 106.80 this morning, I was like, I do not want to be on the, I only want to be on the short side of the dollar yen up at 108. And I hope it saved some of our traders in the chat room, because even though I wasn't trading it, hope it saved them a few bucks, because yeah, this thing looks, it was wicked. It's been wickedly strong for the last couple of days. Remember, there are natural life buyers in this currency pair. What do I mean by that? There is the GPIF, which is the Japanese government, Japanese GPIF, government pension fund.
Japanese pension investment fund, Blake.
There we go. It's the largest investment fund in the world. They're buyers of the dollar yen. They were buyers at 110. They were probably buyers at 105. They were buyers probably at 102. They've been buyers. They're buying, and they're nonstop buying. And and I think it's actually going to turn the tide for the dollar yen longer term. So for those of you that are like, oh, I think the dollar yen's eventually going to 140. I wouldn't disagree with you. Now, not necessarily buying it here because of that, but I think that that we are going to be building a longer term base in the dollar yen. So that's something to think about. I was hoping we'd get a move to 100. That's what I was ultimately looking for, but shoot, I don't know if that's actually going to be able to happen. You know, I don't know. Maybe with the next push lower in equities, if we go down to like 2000, maybe the dollar yen will slump to 100. But I am a buyer somewhere down there, and I'm also a seller. You know, like I said, up at 108. It has been very, very well bid. Don't stand in front of this freight train right now, especially if you got equities that are limit up. You got the Nikkei that's rallying right now. If you haven't looked at the Nikkei, it's ripping. So with the Nikkei moving, the dollar yen tends to move in tandem. So let me pull up the where is it? Where is it? I usually, oh, there it is. So you see the Nikkei's bouncing like a bat out of hell. So yeah, you don't want to be short the dollar yen when this thing's moving higher. So just another thing to think about. But yeah, so guys, before I turn it over to Steve and Stelios and get their thoughts on the US dollar, Norwegian krona, look, we're in a very volatile environment. If you guys aren't in the chat rooms with us throughout the course of the day, I don't know how to help you, because I'm only going to be able to give you limited information on Twitter. But if you want to chat with me and the rest, and it's not just me, it's the, I mean, look, all of these traders here and everybody's talking. And since I closed out my dollar mex, closed dollar Mexican peso at 43 from 21.65, since I said that at 5:08, that was actually 22 minutes ago. You can see all the chatting that's going on, about, just everything. So if you guys want to be, where we're at and we're chatting all day long, come hang out with us there. But you have to be a member of Forex Analytics, and it's only $1 for 10 days to try it out. And then you have to be a premium subscriber to be part of the chat room. But even if you're not, you still have the analysis. My intraday analysis and the end of day analysis, basic, technical, macro, candlestick analysis. Even on the light version, it's $19 a month. Plus, you have an app that gives you, updates when when these support and resistance levels are breached, when there's a new pattern in play, you know, you get the new, you know, get the data flash. I mean, you get so much for $19 a month, and we priced it that way because we just want everybody to have access to it. But it does, if you guys think that making apps and constantly updating this platform and all of the features that you see here, whether it's adding tools and all other stuff, if you think that that is just free for us to do, it's not. That's why we charge. But it's probably the best technology you're going to get for the least amount of money, and we planned it that way so everybody can be involved. All right, guys. Anyway, Steve Stelios, what do you guys feel about this Norwegian?
And needless
krone?
to say, some of the best trades are certain in there, because not all trades are appropriate to be put as pattern plays.
Oh no,
So,
yeah, I no, like today, even though that I did update the US dollar Mexican peso with a 15-minute chart showing you the head and shoulder pattern. As we are at 2155, that's 1,500 pips higher than where we're at right now. So, you know, you'd already be identified with that. But you don't know if I'm buying or selling because I'm in the chat room. In the chat rooms where I'm like doing all my scalping and stuff. Because yeah, patterns in play are they're like by the book patterns, you know, and it's usually
and full position patterns. So,
more like
you know,
a bias. Yeah, it's like
yeah.
a bias. You know, I'm a bias in the, you know, I have a bias in the market, but all of our active stuff is going to be in the chat rooms. But anyway, yeah, I'm gonna let you guys take over, but talk about that Norwegian krone, because that thing has been a mover.
Oh yeah.
All right, guys. Hey, have a great weekend, everybody. TGIF, and I won't see you on the daily roundup because we don't do it on Fridays, but on the week ahead video, I'll see you guys on Sunday. So
I'll see you in 11 hours, Blake.
And-
Have the
and-
Crown Royal ready.
Woohoo! Is it beer 30 yet? Oh, by the way, I may have Grego Horvat do this week. He wanted to do last week's week ahead, but he might do this week. So you guys might have a little treat.
Oh, what a treat. The Wizard.
All right, guys. Have a great
Thank
one.
you, Blake.
Thank you, Blake.
Thanks, Blake.
Thanks. Have a great day. Happy Friday.
So what do we make of this bounce? I'm sure you
Yeah.
guys saw DSI in equities was low single digits, and you know, it has been.
And the fear grid index hit one.
Yes.
For the first time in history.
Yes. I mean, personally, I always like to look a bit ahead. But from what I hear, retail is still buying the dip, which makes me worried. If that wasn't the case, then I would be a little bit more confident. But what I always want to do is what, you know, like Formula One drivers. If you look at where, I saw this film once on TV, they show where their eyes are looking when they're turning. And, you know, a normal person, you turn in and you look at the apex of the corner. They're already looking ahead to the next corner. So this is what you want to be doing. And I was discussing this with a friend of mine that we trade together, and he was saying, you know, what do you think is going to happen 6 months from now, 12 months from now? I said, look, this thing is going to come, it's going to go. Unfortunately, people are going to die. That's really bad. But at the end of the day, we're going to be left with much lower valuations, stocks much lower than where they were a month ago, probably going to drop more. But we are going to have a situation where we have the most stimulus I've seen in my life, and much bigger than 2008.
That anybody has seen in any lifetime, if you ask me.
So you're going to be left in a situation where the money supply and, you know, credit and debt is just going to be, rates are going to be zero. Everything's going to be so easy.
I think we are starting the last part of the game, the end game stage, which is lethal dosage, because I do believe it's going to be lethal dosage of stimulus to the economy. So, you know, so far they think that they've, you know, escaped the repercussions of throwing so much liquidity in the system during the past 20 years, and, you know, mostly during the, you know, the past 10 years. And I think, you know, this is when you know, the system is going to break. So
well, the question, I think for me, the big question is with the biggest bubble of them all, which is debt. and what is going to happen with debt. Personally, I don't think, you know, you have the Fed owning, you know, trillions of debt, and you know, the BOJ monetizing everything. I don't think there's going to be defaults in debt, obviously in the big economies like US, Japan, you know, UK. I don't think there's going to be defaults. I think that's near zero probability. But what's going to happen? They're going to keep issuing more and more because they have to. So the end result for me is just a devaluation of currencies. End of story. You know, all my friends are asking me, what should I do? What do you think? What would you be doing? I want to leave something to my kids. I said, just buy
Real assets.
real assets. End of
Real
story.
assets. End of story.
Pick whatever
Yeah.
you want. You have 10 grand to spend, buy a really nice rare watch, or you know, you have more, buy land. You know, that's what I'm doing anyway. So you know, you're going to have fluctuations, but at the end of the day, when you have money supply increasing so much and the purchasing power of every fiat currency just decreasing
just
every
think
decade.
about it. Just the repo for these 2 days is going to be 1 trillion. I mean,
It's like you're like
just,
talking about yen.
yeah, just think about it. I mean, we're not talking about 1 trillion yen. Indeed, we're talking about $1 trillion.
Yeah. So that's my long-term view, and I think, you know, a year or two from now, markets are going to be much better. Where is the bottom? I have no idea. You know, I think we're getting closer to the bottom than we were obviously a month ago, but we could go way lower. But in the end, you're going to be left with money, loads of money, just sloshing around the system, trying to find somewhere to go. And when fear goes away, when fear and greed goes, you know, outside of single digits, then people are going to go back. Looking to get yield, looking to get returns, because as we all know, the market has really no memory. People don't remember, you know, 10 years from now.
Yeah, it has a very short-term memory,
12
anyhow.
years from the
Technically speaking, if you pull up the weekly of the S&P and you believe in the megaphone formation, Steve probably has that line on his weekly. It would be off the low in the end of 18, and then the low in early 19.
No.
Yeah.
I know
That
which line you're talking about. I don't have it on my chart because
Okay,
generally
okay.
I'm not.
All right.
You
Well,
know,
now you do. Let me just explain. So we could go
Yeah.
down into this megaphone line, and then if you believe in the megaphone, we could actually go back. Or broadening formations can go on for a while. Why can't we go down there and then even rally back to the top of the megaphone? Even the bears, like David Brady says, the Fed will be able to generate one more rally to new highs. That's what megaphones imply. You never know when they're over. So we could go down to 2100, whatever that is, and then go back to the megaphone and not have a throwover.
Yeah,
so
2100.
Yeah,
it currently is around 2100.
So I mean, you know, that is a possibility that the Fed is successful one more time because of what you guys are talking about to generate one more move back to the upside of
Yeah,
the
that would imply an almost 40% lower from the highs, right?
Yeah.
40, I'm not saying it by being surprised, because you know better than almost anybody that I kept saying be careful, because at some point stocks are going to get cut in half, and it's going to happen much faster than you can you can say bear market.
Not even you thought it would happen this fast.
No, I mean, it's unpredictable how fast it will happen,
right?
And we've said many times that, you know, the usual adage that, you know, up with the escalator, down with the elevator, you know, proves to be the case every time.
Yeah, down is faster.
Speaking of bear markets, you remember this Andrew's pitchfork that I was talking about again and again. And when we were up there, I said that, listen, this is the first overthrow we have, you know, with conditions being what they are. And look at this. Within 4 weeks, we went from above the 200% extension to much below the 200% extension to the downside. So, you know, that tells you everything you want to know.
Is that an impulsive move?
Let me think. So basically, at yesterday's lows, people that were buying, let's say, February 2017 found themselves back in the money. So if you bought back in 2017 and you held on to your positions for that long, yesterday night, the only thing you had left was dividends, nothing else. And that happened within less than 4 weeks.
Yeah.
So what does that tell you about a market that does that? You know, a lot of people are using the stupid excuse, which is coronavirus. Coronavirus is a huge disruptor. There is no question about it. But remember what we've been saying again and again. Every bubble eventually finds its prick.
And the
If it was,
repo market problems were way before
oh yeah,
Corona.
oh yeah,
You know,
oh yeah,
so I
absolutely.
mean, there was already issues, and the Fed was already coming in with what they didn't want to call QE. So the markets weren't functioning before this. Is
Of
the
course they
point.
weren't, because we don't have real markets since many years ago. There is no price discovery anymore. Listen, for those that don't understand, you know, some basic functions, because you know sometimes people go into trading and they never stop you know, to consider a little bit how an economy really works and what is the actual function of the financial markets. The actual function of the financial markets is extremely important to any economy. It's in essence sacred, because what the financial markets are supposed to be doing when left to function freely
Capital
is
formation.
they assign a risk, and they in essence distribute capital where it should be, meaning they reward people, enterprises, states, countries that are prudent and fiscally responsible by giving them the ability to lend money, you know, at low prices, and they punish those that exercise the exact opposite, right? I mean, being fiscally responsible, taking huge risks that might, you know, end up blowing them up, etc. Now, when you have an outside force, central banks, in essence, bidding up every single asset, no matter how risky it is, and taking prices down to ridiculous levels, and by prices now I mean yields, because don't forget the yield is a price, right? Yield is a price. So when they're bidding down yields to ridiculous levels, what happens is what in Austrian economics is called malinvestments. You get capital chasing after bad investments because you know the outside forces make them appear appealing. So, you know, that builds a lot of inadequacies, you know, a lot of distortions in a system. And the more you try to fix that by, you know, by poisoning the system even further, the worse this happens. And at the end of the day, it all blows up. That is why, unfortunately, we have transformed the business cycle to a boom-bust cycle. That's not how it's supposed to be. The business cycle is not supposed to be a boom-bust cycle, a period that everything moves in only one direction, everything goes up concurrently, nobody pays attention to anything that, you know, even resembles fundamental analysis, and then one day suddenly everything blows up and goes to pieces. That's not how it's supposed to work. But unfortunately, that's how they've made it function, because you know it's completely distorted. It's absolutely decoupled from reality. So the more we try to solve a problem by administering more of the problem, the more you're trying to make a drug patient, a drug addict, better by administering more drugs, the worse it's going to become. And that's what we're seeing here. And I think that at some point, by trying to keep the drug patient, the drug addict in this case, satisfied, you will end up administering a lethal dosage.
God
And
damn, the pusher man.
yeah, and I think that that's the end game
Steppenwolf.
here. I think that's the end game here. We're going to administer the economy with a lethal dosage of monetary policy, and that's going to be it. Then we're going to start we're going to get ourselves in a totally different game. And unfortunately, social unrest is going to be, the tipping point of, what's about to follow there. And inflation, of course, is going to be, the end game having to do with, the economy.
Do you
And
think
we
there'll be
all know,
social unrest in Greece?
I think there's going to be social unrest everywhere eventually,
Everywhere. Yeah.
because with the methods they are enforcing, there is absolutely nothing positive that can come, because in essence, these type of policies, what they do is they destroy middle class. And everybody knows that if you don't have a healthy middle class, there is absolutely no way you can have a healthy economy.
Okay.
So anyhow, for those of you that are in the chat room, you know that I bought yesterday, more or less at the close, I bought Nasdaq, 1/3 of a position.
Nice, Steve. I
Yeah.
heard you also bought a bunch of meat in a freezer.
Oh yeah, I have like 200 liters of
So
freezer
you got
full of...
long some meat and a freezer before you bought Nasdaq.
Yeah, I have I have a lot
What a
of things
versatile guy. All right,
stacked up at the moment. So yeah, I bought some Nasdaq yesterday because I was what I mentioned yesterday. I bought Nasdaq a little bit lower from 7,300. And the reason I did that is, as I wrote in the chat room, is because we were testing the confluence of this descending channel here in the Nasdaq and the 61.8% fib from the December 2018 low to the all-time high that we recently had. I found myself briefly out of the money. I had, as I wrote in the chat room, I had put my stop loss. I had actually put a stop loss here, of course, because I don't want to go to sleep, even with 1/3 of a position under such conditions, and not have a stop loss. Because if I was awake, that would be a totally different thing. But I bought a little bit of Nasdaq, and like 1.5 hours later, I was asleep. So as I wrote yesterday, my stop loss was at 6,900. So, I was lucky it didn't get triggered. And my first target, the first target I was looking for was this horizontal resistance area. And then the next one, we're getting very close to it. It's at 7,650. So, that's been working out very nicely. I already trailed my stop loss to break even. Now, do I think that we found the low here? Absolutely not. I still believe this is going to prove to be a dead cat bounce. Now, let me reiterate here. Rebounds in bear markets can be very, very brutal. And if you remember, I mentioned that yesterday. I don't care if we close the day today 8% higher. I don't care if we're going to close the day another 8% higher tomorrow. My thesis that this rebound is eventually to be sold remains the same. So if you're looking for the S&P, which is more or less a barometer, the areas I would be looking as selling opportunities here would be 2,700, and above that, roughly 2,900, 2,890, 29, 2910. Okay, so I find it quite likely that we might rebound towards there. Let's now delete. Or even further towards that area. In any case, no matter how strongly we rebound to these levels, I will have definitely taken profits to that Nasdaq long position, before that, and I'm going to be looking to sell again. As simple as that. So, personally, I'm not going to care about how strongly this market rebounds. I'm not going to really care about what they announce, because they're definitely going to throw everything at it. Keep in mind that last time I checked yesterday, and Stelio, correct me if I'm right, the market was pricing in something like a 95% probability that at the 18th of March, the Fed is going to cut down to 0. Is that still the case, Stelio? Oh, he's not here. I think that was the case. So we should expect that, within the next week, we're going to get a lot more monetary stimulus, probably promises for fiscal stimulus. We've already seen word from Germany, Europe saying that you know, they're gonna freeze in essence the deficit target, so you know we can have some fiscal expansion. I'm absolutely certain that Trump is going to throw everything at it from both the monetary and fiscal policy sides. So definitely there's going to be a lot of positive market news coming out, and the market is very likely to keep responding positively. Okay, 65% priced in, 0 to 25 basis points target as of yesterday's close. Okay, so 65% chance that they're going directly to 0. Okay, and more or less a given that they're going between 0 to 25 and 50 basis points. In my opinion, doesn't really matter at all. Does it really make a difference if they go directly to 0 this month, or 15 days after that, or 1 month after that? It makes absolutely no difference. So the market might react higher. Of course, anything that is risk correlated should follow higher, but I don't think that any of that is going to fix the problem. So I think there's going to be more downside coming, as simple as that. Now, those of you that are in the chat room also know that I don't anymore have a position in Palladium, because Palladium actually collapsed yesterday. From the highs of the day to the lows of the day, it was 27%. I actually booked that position, making 25.2% profit. I did consider Palladium, you can see it here, to be one of the biggest bubbles we've seen getting built during this period. And you know what bubbles do is that they eventually pop. And you know,
Okay, there's an example of a very good call, a very good trade, and an excellent hold. Congratulations.
Thank you. Although I almost lost that trade because I actually
I don't want to know. Just accept it.
trailed my
Just
stop
say
loss.
thank you. Just say thank
Yeah,
you.
thank you. I trailed my stop
right.
loss. I got stopped out when we had that rebound.
Okay.
But then, you know, I contemplated, and you know, 1 day later, I opened again, half a position short, because I thought to myself, you know, you're stupid. You shouldn't have trailed your stop loss. This thing has no chance but collapsing lower following risk. So at least I persuaded myself
That's a
to
pro
jump back.
move. Yeah. You
It
overcame the psychology.
Yeah, it didn't feel that good when I was doing it. I can tell you that much.
Yeah,
it didn't.
Yeah,
it didn't.
That makes you a pro.
And I'm, you know, I don't feel that good saying that I felt it, because I shouldn't have felt it. But as I said, I almost convinced myself to stay out of it, which would have been very, very stupid.
Yeah,
very, very stupid, because in
the past you have convinced yourself to stay out of it. And then watched opportunity cost. And to me, I don't know about you, Steve, but the opportunity cost is more painful to me than being stopped out.
Absolutely.
Than being stopped out on a trade. Okay.
Yeah, psychologically, it's very, very painful. It's what they say as an advice, which I think is one of the best advices in, you know, for humans, for any type of situation, is that, you know, most frequently it's better regretting something you did than regretting for not doing something that you wanted to do. You know what I mean?
That's a pearl.
Yeah. So in this case, obviously, if you put some thought on it, I'm not saying like, you know, do anything crazy that comes in mind just, you know, just because you don't want to stay out of it. But you know, when you've done some analysis and there was absolutely certain that this bubble is going to pop, I mean, I had every reason to have a conviction in it, and I almost made a fraction of those profits. Anyhow,
so it's better for me to regret knowing you guys than having never met you guys.
That's very true, actually. At least you get the chance to regret it, right?
Yeah, thanks, buddy. All right. Anyway, you know, we have a question before I bring Samantha on, and it looks like we're getting the third drive up there on the silver gold ratio, Steve. Glenn Jeffries is asking if it might be time to sell. I think we could be there, the gold silver ratio.
First of all, before we go to the gold silver ratio, let's see what has happened with gold. So gold came down once again to retest these broken triangles, trend line resistance as support, and so far it's holding.
It's going to make a new high, I think, Steve, with a recovery in the market. Since the sell-off wasn't as deep, if we get a fib retrace in the market, gold could go to your target again, 1723, if it holds its low.
It might. From a risk-reward perspective, it definitely makes sense.
Yeah.
But you know, my conviction is not that high. As I've said even some days ago, I do own physical gold. I wasn't looking to be a buyer of gold in the financial markets because it was quite clear that the metal was fatigued, having to do with how it was moving. I mean, momentum was clearly
the divergence
absent. Silver was clearly diverging in behavior. So I had several signals telling me that despite me being very, very bullish in the medium to long term about the fate of gold, I didn't want to participate in you know, hoping there's going to be some upside in the short term. So do I think that it's moving to new highs from here? I think it might. I mean, definitely it might.
I think it will. If it holds 1550, I think it will. That'll be a third drive.
I'm going to stay away from this market for now still. I mean, I own my physical, and if all goes well.
What's your address? You keep talking about what? Let's go to Steve's house and bring your
and if all
bring
goes
your
well,
what are those things that people use on the beach to find coins?
And if all goes well, my metal detectors. And if all goes well,
but let's go to Steve's with our metal detectors.
My son will inherit it from me. You know, I don't want to have to use it. You know, but
till he gets married.
Why? What happens after that?
You know. What?
No, I don't.
He'll give it to her.
Nah.
He'll make jewelry out of all the coins that you poured your blood, sweat, and tears.
Nah. I inherited some of that, not all of it, and trust me, it's staying where it is. My son is inheriting that.
Jason will give it all away to women. Tell me.
Not if I have any saying in it.
You won't be. Good luck.
Thank you.
Anyway,
crude, by the way, also what under normal circumstances would look like a massive rebound. I mean, somebody would look at this like, oh, almost 8% higher. Oh my God. And then you look at the chart and it makes 8% look like a little blip, right? Just look at this. So do I think that the fact that crude is 8% higher today means that it's going to explode higher? Absolutely not. As far as I'm concerned, this can prove to be just something like this. Something like a triangle, for example.
Yeah.
Right. Or we might, you know, post a higher high to have like an ABC. We might move all the way towards 38, even 40, and then continue lower. But what I said yesterday hasn't changed, meaning we might see crude recovering with anything that is risk related. But I still think that we will end up seeing lower prices in crude, which is going to be a great buying opportunity. So I do think that crude is going to be an amazing buying opportunity, but not yet.
All right, you have 1 minute for gold-silver ratio.
Gold-silver ratio, yeah, sure, absolutely. So gold-silver ratio, at
new highs here.
New highs.
Steve, what's interesting about FACE is you can tell that this week was actually a great week for most of the team. Okay, can you imagine being in a chat room where people were, uber bullish and real long and what they've gone through in the last couple of weeks? I don't think they're cracking jokes like we are.
Let me just tell you my story. I started the week by having lost 25% on crude on half of a position.
Right.
And I finished the week by having made 25.2% on half of a position on Palladium, and in between, I've made some money trading other stuff like the Nasdaq now, etc. So it's been a good week. But bottom line, and I really feel strongly about it, and you should consider it. These are the conditions under if you want to be a trader, you should be thriving. So don't be afraid of risk. If you know how to do it properly, meaning, of course, you're going to adjust the positions based on volatility, right? I mean, imagine if I had a full position in crude. Of course, somebody can say, imagine if you had a full position in Palladium, but something, if you have a full position that it ends up losing 25%, you might not have the ability to have a full position at any time in the future ever again. So bottom line is, these markets are moving. When the market is strongly moving, it usually works very nicely with technicals. So these are the type of markets that you should be looking forward to. And
all I know is anyone that's been listening to us the last few months weren't long spoos.
Oh yeah, and if you were, sorry to say that, but you only have yourself to blame.
Okay. All right. Well, Steve, great trading week again. I think I said that to you last Friday because you were short for the decline, most of the decline. So,
oh yeah, I've done, now that I recouped back the losses of crude with one trade, I've done very well during the past month. Very well. All right. No complaints.
Well, congratulations. And it looks like we're getting a lot more members now because people realize they can't just sit in spiders and be a genius. So anyway,
I think Michael Bear said it, and he's very right. He believes that during this bear market, the passive investment bubble is gonna burst as well, because a lot of people thought that throwing money on indices and ETFs, is going to be a winner simply because everything just went up and everything just went down. So I think now the market is going to go back to realizing that there is place for what we call value investing, right? I mean, there are things you should be buying even when stock markets get destroyed, and there are things you should be selling even when the stock markets are soaring.
Sir Isaac Newton, law of gravity,
indeed,
reasserts itself. All right, absolutely. Steve, stay healthy, you and your family, buddy. And Samantha, I'm going to get you set up here now.
Have a great weekend, everybody.
It's been a long time since you and I've had a chance to talk. And I'm unmuting you. Samantha, how are you? Welcome back to Face.
Hey, can you hear me okay?
Yeah, I can hear you. Can see your screen, Samantha. So it's been such a long time. My fault.
It has.
I own it. We
forgiven.
We had a little lovers quarrel, and look at and we've made up, and
there's always two sides to the market, right?
Yes, there is, and I know
so
that
glad.
I know you excel in bear moves, and I just know that you were probably really having some great trading opportunities that you were showing people and doing for yourself. So what do you make out of the last couple of weeks? Where are we? I'm interested in seeing your radar screen here.
Well, thank you first of all, for inviting me. And it is true, I am actually much better at calling tops than bottoms, but that's because bottoms are tops of the process. Bottoms are typically an event. And in that particular case, I have more time to find divergences. Yeah. So it is easier for me to look for tops, and that could be in any time frame, honestly. Because I do the chase, the swing, the trend trading, but this is very much important for this particular drawdown that we've had. So I don't know if people know who I am, but I want to just let you know quick. I do have a Twitter site, which obviously you and I follow each other, and it's where I do post some of my macro thoughts, because that's the backdrop I use against this technical, drilling into trade ideas, absolutely. And Volatility is my thing. I'm looking for volatility to reprice everything. And in this market, we have our fair share. So this is my Twitter channel at Samantha LaDuke, for those who might not know. I also have a YouTube channel. And in fact, I did an online presentation just last week on exactly what I saw in the divergence to time this with precision. So literally just play by play by play, day by day. I think it's important. Also, the option market, and not the usual retail unusual option activity, but at the vol strategies, the CTAs, and using that the gamma positioning to better size up when we're being pulled higher and when we're being pulled lower. So I definitely recommend checking that out.
Okay, so Amantha, I saw that first tweet that you had out, and you said your most important market tell is has triggered a financial crisis.
Yes, it has, and I pinned that. So I actually am.
What is the tell?
Well, I'm going to show you that. So that's actually what I was kind of getting to. I just, in this YouTube thing, like, I'm really bullish IPOs, bullish, bullish, bullish. And then December 18th, I'm like, nope, not anymore. And in fact, I tweeted on the 18th that I thought the market was going to break. And Friday was it. Next day was actually it. It was the yen was just not performing the way that it should. And so I do have some free stuff here that goes into explaining what I saw. But yeah, this is what I wanted to go over today, because I don't think this is safe. Even though we're having a really nice bounce this morning after the Fed bazooka yesterday, this is definitely still not over. And I'm going to go back a little bit. Market thoughts. This is what I post for clients actually every day. And right now, my two recurring themes the past month: liquidity, liquidation. Which is better? Like, which is going to win this boxing round? Okay, so what's been going on with the Fed. We don't need to rehash what they did yesterday, what they've done with repo, what they've done with emergency rate cut, what they're likely to do on Wednesday when they announce the next set of cuts. I'm going to assume that your audience is quite intelligent and knows what's going on in regards to Fed liquidity, global liquidity. Everyone's easing. Everyone's trying to infuse liquidity to stabilize market. Guess what? Liquidation right now is beating liquidity. So yesterday was a nice tell where you could see that, algo bounce on news of the Fed bazooka, the QE, and 101.5 trillion also in repo support next 3 days. So that's just not enough. I think liquidation has been the theme. I saw it on Tuesday, the 25th, and it was massive. And I'll show you what I saw from a retail perspective, because I'm a retail trader. I actively trade for a living, and I support clients.
They were buying dips for 2 weeks, right, Samantha?
This whole thing from November until February was just a sold to you market. I kept saying it over and over again, but it was very productive, especially in my particular trading room. We were trading IPOs just 3 months solid, November, December, January. But it turned into, of course, the Corona crash, right? The coronavirus crash. So right now, my whole thing was, okay, this is serious. I said back on January 22nd that this was going to be the story of the year of 2020. And now the real test would be, could cowbell, in that boxing match, if you will, take out COVID-19, or would COVID-19 overpower cowbell? So it's round by round by round, right? Who's going to win? We're like maybe.
What's a cowbell?
Cowbell's the Fed, global central bank.
The Fed's a cowbell. All right.
Yeah, that kind of cowbell. So I don't need to tell you right now which is winning. We just dropped 28%, right, in 3 weeks. Big, big, big deal. So we have a major liquidation event occurring, and underneath the surface as well, with repo and folks are just saying bye-bye, I'm out of here. But there's some things that I think were kind of interesting. Early on, I was trying to figure out, I didn't see this as a V shape at all, and I'll show you why. But I also wasn't, it's going to be its own thing. Is it 2008? This sentiment, I kind of do this overview in my head and also for clients. We got sentiment, technical, fundamental, macro, intermarket. I also do the quant. read. I'm not a quant trader, but I study it so that I can be on the right side, if you will.
Yeah.
This is a human issue driving financial stress.
I like that. Yeah.
2008 was a financial issue that caused human stress. This one is worse. So I do not think that this is a very tradable bounce, but this is not a safety. This is not, the markets are broken. It's not safe.
So do
the
you tell
technical-
people to go to 90-day T-bills and just roll them, especially since
Oh,
this
cash,
week?
cash, and a multi-currency account preferably. So
Oh, yeah?
technical. Oh, yeah. So
Multi-currency account. Where do you do that? Where do you do that?
Let's go into, let me get through this post.
All right. You know what? I'm just going to let you go.
Because I know we don't have much time. And the markets
Go
will
ahead.
be opening.
Make it a lecture, Samantha.
No,
Go
I
ahead.
want to get through this because I want you to pick it apart after. Feel free. So technically, the rate of change of selling is unprecedented. Market is down, obviously, in very quick order. This is, these are price insensitive sellers. That's my contention. The fundamental backdrop, no one knows where's fair value. On pricing in the impact of COVID-19 to company earnings, growth, even the policy costs of what's happening right now. The macro, clear liquidity crisis, and it could lead to solvency crisis. It will definitely take some folks out. I'm not just talking hedge funds in the risk parity trade that has been unwound and is still unwinding. VIX is still bid. That chart has done nothing wrong. So let's update some charts, big picture, because I think recession watch is actually on my radar, and I want it to be on other people's radar because they might not kind of say, it's a distant problem. I think it's going to be here sooner than later. And this is one chart that I have, shown vertical lines, recession, steepening of the yield curve, flattening. We are really, really close to moving above this zero line, which is nice. Intermarket tell my stuff, right? This is not a macro. I can listen to Raoul Powell for all the macro. This is my intermarket tell that says it's not safe.
Okay, so with the yield curve beginning to steepen, some people would say, well, that's good. That means we're recovering. We're not inverting.
Yeah, that's not really good. So,
okay, well, I'm just saying. Go ahead.
So, this is not really so helpful when the initial yield curve inversion, takes place, and then trying to time the market. What I actually like is a little bit more intermarket, which says, you know what, we're actually going to roll over even more. And this is one of the things that triggered recently this week. So we have been in nice, big picture. I'm talking about for trend trading, right? Trend is broken now. That's basically what I want to get.
That's what you use rate of change for.
Correct. Another thing I use, I love this Gap SPX earnings guide. And if you go all the way back here to late 90s, and this was pinned on my tweet, but you'll see it here. You can see that 8 times out of 9, this has been a fabulous trend trading timing vehicle. Now, remember, I chase, hourly, get swing trades for weeks and months, but I'm talking big picture. Is the trend broken? Because most people have been trying to buy every dip in the past 3 weeks and they're getting hurt. So my point is, well, we're kind of at an inflection point, right? It looks like it's going to tip over. What on earth, maybe we just pop right back up. Earnings are going to be hunky-dory. Well, come on. We know they're not going to be. Take a look at Goldman. They just revised a negative EPS year over year for the next 3 quarters. So what do you think is going to happen to my Gap SPX intermarket chart? It's going to roll over as well. So I think the recession watch, people don't really put, economists, they have their own models. It's not what I use. I'm looking at the steepening of the curve. I'm looking at my rate of change. I'm looking at negative EPS growth with my Gap chart analysis. And probably you've seen this before, the unemployment claim in regards, if I can pop it up. It's not opening. Anyway, this is intonating higher, and we know we're going to have higher next month's reading. There's not a question. It's going to go higher for March. It's going to go higher for April. we have layoffs, we have just
Yeah.
retrenchment as it relates to company safety. So this all leads me to a very, aside from the macro considerations, this leads me to be very, very cautious that recession is here. The market just doesn't know it yet. So let's
Okay.
move on to when you asked about the tells. So I do this work in SPX, and it's my stock bond volatility ratio work. And I warned clients back in February, and actually I go over this every single day, but I warned clients that this divergence of VIX above the stock bond ratio was very, very negative and worrisome, right? So that's one of the reasons why I called this a sold to you rally. Like underneath the surface, it was in danger. I had a dozen charts that showed massive divergence. So timing it is obviously where you have to go on narrow, very, very narrow time frames, but that's what I do. I love playing volatility. So this is an initial stock bond volatility ratio, just as an example, where I warned we're in trouble. This is where we are today. And I don't know if you can see this.
Yeah,
but,
we can.
Okay. So I told clients that if this ratio gets above the 65 moving average, okay, it is short at will. Literally, it's what I wrote. Short at will. Nothing's going to be held down. When this gets above the 200 week, that's a financial crisis. And I have not seen that since 2008. So
Okay.
that's a big, big deal. And that's when, after the 20% drawdown, it was Monday, this past Monday, I was depressed because it triggered. And I said, you know what? This isn't done yet. We're not actually going to have a correction, just a correction. We're going to have a financial crisis. And I'm going to hold to that because my intermarket tells me we're there. My recession watch indicators tell me we're there. Look at credit, just from an intermarket standpoint.
Yeah.
I can go over macro reasons, but this is treasuries to
bonds.
high, huh?
Yeah, junk. Yeah.
This is junk. It's high yield. So
Yeah.
it's that rotation, out of high yield into treasuries, right? You can see what's happened with lovely TLT. But my point was, this is not at all looking good for oil, and if it's not good for oil, it's not going to be good for the bond holders, the credit markets that, hold this debt. I was very worried that this was going to explode higher. And I did not know the oil war was going to be declared by Saudi Arabia and Russia would join in, and the Arab Emirates.
Right.
But this is where it is today.
Yeah.
That's not correction territory. That's price insensitive liquidation.
Panic.
That's panic in the credit markets.
Yeah.
Now I can show you actual yields, of course, have also been spiking, and spreads and all that jazz. But my point
Even
is,
TLT had a lousy week in face of all this carnage.
no asset is safe. And I wrote that the past few weeks. No asset is safe, not even gold.
Yeah.
No question. They're going to sell gold as a collateral. It's collateral when they have margin calls, whatever. The Fed, I think, was behind this recent one. I have a tweet on that. Here's another thing, Brett. This is what I use as my bread and butter, okay? This is big picture, and you can't really tell, so I'm going to bring you on a smaller picture. And by the way, we're in bounce territory, but this...
Yeah. Wow. Yeah.
Not like others. This is the NYSE Composite Index. Every day I'm looking at this stuff, right? And
Yeah.
I have a particular relationship with intermarket analysis. It's my thing. This is not like the others. And I'm talking about any other correction or crisis. It doesn't even look like 2008. It's worse.
Yeah.
So I was looking at this, kind of head and shoulders up here, warning clients. That was a big deal back in January 2018.
Yeah.
It doubled my account in 2 weeks because no other time had it been this elevated. Guess what? We tagged and came right back down. It's not done.
Yeah.
It's not
Okay.
done. So
Okay.
I'm quickly trying to get through because I know.
No, it's good.
Okay.
Right.
Here, this is another kind of thing that people don't necessarily look at, but I look underneath for patterns as well as divergences. So Morningstar reversal on this cumulative 4-week new high, new low chart. It happens to be from TC 2000. The other stuff you saw was in stock charts. I also use, charting in my trading platforms, but these are, kind of unique, if you will, to this platform. This was a bottom, a morning star reversal in that Christmas Eve massacre, right? We went V-shape, Mnuchin called the banks. Okay, Mnuchin called the banks a few days ago, didn't help.
Yeah,
Banks
they were
said,
at the White House saying
yep.
how strong they were.
Yeah,
When they were
Guess
really
what?
there saying, look, President Trump, we've underwritten a lot of shale oil debt.
And not just shale, but it's also the fact that they don't want to give it out because they don't trust they're going to get it back. So this is, by the way, on the floor right now. If you look fast forward, this is the 100 week. You can use it just like any other moving average, right? I mean, I chart everything. This Morningstar reversal, island, blah, blah, blah. Morningstar reversal, island reversal on a daily. It is all the way down here, and it's been straight down. Never, ever happened like that. And I wrote, everyone thinks this gap on Monday is going to get filled. They're so happy. There is nothing, relatively speaking, for a floor. There's nothing. And then, of course, I said forced selling meets natural selling. So the CTAs, of course, they get their levels where, they're negative gamma, they have to, selling begets selling. Same darn thing in the natural world where we're like, that's not good. And we're not talking unusual option activity from retail folks, or small institutions, but the largest group of assets under management, they're even slower look back period. So once that, it's just a waterfall, and we saw it. It literally, it produced exactly what I feared. And every single day, I saw massive distribution, and every single day I told clients in my live trading room, do not cover. There's no reason to cover. I see no floor, zero. So the other thing was this gold SPX intermarket analysis, which is literally, again, pattern recognition with a ratio. And I said, guess what that means? Gold could even stay where it is, and SPY falls, and SPY falls. So you know where this is right now. It's way up here, right? So the point is, when you have all of these kind of coalescing and, at the same time, there's this convergence of fear, well, volatility. This is actually the 3-month, but it doesn't matter. You get the idea. Volatility is really a big deal. I cautioned when we went into backwardation, which, by the way, some portfolio managers are wicked smart. As soon as volatility goes into backwardation, they liquidate. And they will go back into the stock market when we're back in contango. Now, I cautioned this could be several months. And I said, literally, this could be several months on the 25th. Don't think that this is going to be just a V shape. I don't think so. And I had also cautioned, because we did an overshoot. I love overshoots, right? Like, you can look at the dollar yen and you can see where it was a complete head fake back on the 18th, 19th, 20th. Beautiful. It's, in other words, the first move is the wrong one, and then it has the energy to explode. You can see that with a dollar a few days ago, looked like it was going to break. Knew that thing was going to bounce back up. So this is also the outliers revert with velocity, and that's where I go into my volatility. Now look at this. You can't even see the scale anymore. Okay, that was the 25th. This is now. Look what it did to my axes. And look how low this is. That's not like the others. So I am content also, we closed on the lows. We are obviously still in, I think, panic mode. It looks very orderly, but it's really not. So I presented this to clients where I think we're going to have a little bounce. What do we have in this morning? Okay, this was just taken. My price target for this week was 2,400. It originally was 2,666. And then I saw what was happening under the surface, and I said, nope, revising that, 2,400 for SPX. Now, this is bounce worthy. That's all I'm giving this market. 5 to 10%, okay, fine. And if we get some kind of central bank, debt jubilee over the weekend, we can go higher. And we got a wall of puts that need to be rolled or covered, which can by the CTAs and the quant, the vol strategists that have, been playing this VIX explosion and are actually unwinding that risk parity trade. I think that could actually create fuel for a sizable bounce into options expiration. But
Which
then
is when?
next week, next Friday.
Okay. And
But
the
then
debt jubilee is going to be on what? Giving people time, like on student loans, etc.?
I don't know what they're going to do. This is just way too big a problem. It's
so
way too big a
okay,
problem.
so here's the question, Samantha. If this is worse
So
with
this was, by the way,
everything
my
that we've
bounce
seen
level.
than 2008, why are we talking about recession? Maybe we should bring up the D word.
I can't do that. So my crystal ball is 3 to 6 months. I'm really good in that time frame. I'm
Okay.
not.
But it's worse.
It is worse, but I'm just telling you, I'm not good with
That's
that time
PR.
frame.
That's public relations. All right, go ahead.
So my last point, because I know the market's opening, you want to kick me off. The big risk and very real risk, I told my clients yesterday morning, and I also public service, if you will, because I think it's a risk.
Market holiday.
Oh my God, absolutely. And the biggest, of course, as an option trader, I'm like, be aware. This is not going to be good for short duration. Add some wicked time on that. And more importantly, if we do close, and then let's say we're closed for 2, 3, 4 weeks, right? Trying to get COVID-19, quote unquote, under control. When they open it up, they're only going to open it up on good news. So anyone who is strongly positioned with puts, right, or short is going to have their head taken off when the market opens, potentially. That did happen, in 9/11. It happened in 9/11 when we opened, days later. So I used this morning, actually, where there were hundreds and hundreds of monkeys in Thailand going after one banana. And that one banana represents liquidity. And those monkeys are the bankers. Be careful. I really think right now with COVID, it is capital. This is what I wrote clients exactly. This is exactly what I wrote clients. Capital preservation meets life preservation. And with that, know what you own.
Okay, so Samantha, great presentation. What are you doing personally about this coronavirus? Social distancing with all the money that you've made in the markets? Do you have a bunker somewhere?
No, I don't even have a mask.
Okay.
No,
so
I think
what do you think is going to, I'm sure you looked into it. What's your view?
oh my God, I have studied this and I warned about this in January. It's ridiculous. But here's the deal. I really think that this is not panic worthy from the personal standpoint until it reaches us individually and our families. Then we're going to be in a whole bunch of pain and suffering. I am trying to stay focused on the capital, the preservation, the warning of safeguard, so people don't have that added stress. Does that make sense? So for me, I live in a bubble, same house. I walk my dog. I don't get out much. I'm not and I'm young and I'm healthy, all that.
Okay.
My fear is not, and my anxiety is not around contracting COVID-19. I think I will. I think what a large percentage of the population will, and then a smaller percentage will be seriously sick, and then a smaller percentage still will die. And it's real. And it's the ineptitude of what's going on right now with political leadership is extremely frustrating. And I don't know what else to tell you there. I don't
Is
have
this a repeat of the like 100-year cycle of the Spanish flu pandemic?
Yes, and there's really a wonderful video. I sent it to my son. My son sent it to me, and at the same time, like an email. It was hysterical by Joe Rogan, and he. Yes, I also retweeted that. It's a fabulous, the first 15 minutes that goes off and then it comes back on. But I think that is the awareness we don't have is the intensity of this disease, but also the impact on our economy. And of course, I think life preservation meets capital preservation. And my focus has been, it isn't getting sick. Right now, it's the added pressure of having a very sick market. And for those who are traders, my clients, and money managers, my clients, I want to make them aware just as much as the impact of the disease itself personally. I'm not a health practitioner. I'm a market analyst, and this is my thing.
Well, Samantha, Corona, fear that I'll own you. Born in a lab in China. Spreading
Well,
till
I don't
find
want
you.
that. No, I don't think that. I actually don't think that it's worth our time to say it's made in China at all. It doesn't do us
Why?
any good.
Why?
Because I think xenophobia and racism is bad. And I
Okay.
think
Don't you
labeling,
think the streets of Hong Kong are pretty quiet now?
I think that this is a financial crisis and it's also
Yeah.
a personal responsibility crisis. I think we have to help each other and not pile on to the blame game, because then nothing will get done and we will hurt ourselves even more.
Okay. And do you think we'll have elections this fall in the midst of this?
Oh, I think I can't think that far ahead. Honestly, I did
Okay.
say that a few weeks ago, that this
What?
was Trump's card, that he could cancel elections and secure himself, some more time. But it's too far out there right now, and I'm not going to make. I think it's a high probability, but right now that's not in my.
Go with your strengths.
3 to 6
Samantha
months.
Leduc.
Exactly.
Go with your strengths. Samantha knows markets, and encourage everyone to follow her. And as you could tell, she's very passionate about it, has conviction about everything she says. And was nice talking to you again, my trading warrior sister.
Oh, thank you so much, Dale. Have a wonderful weekend and be safe out there.
Yeah, much health and many pips to you and your people.
Thank you
So
kindly, sir.
all right. So everyone, don't remember, don't just count your pips, count your blessings. Stay healthy, stay safe, and stay with Forex Analytics. I'll talk to you later. Have a great weekend. Adios.
Bye.
Bye-bye. Trump.